This was actually a fun class to put together. Okay, 44. Should I start the webinar?
I think so, yeah, and I'll give it a few seconds before talking. Okay.
Okay, let's do this.
Okay. Are we live?
We're live.
We are live. Okay, we'll
We are
just
live and
I see
alive.
the participants coming in, so I'll wait till that till everyone is let in, and then we'll get started.
Yeah, I think we had 107
Oh, wow.
as of
Okay.
this morning, but
All right, everyone, just be patient. We're at about 60 coming in, so we'll just get that number a little higher before we officially get started. Everyone can sip their coffee so they'll stay awake for this morning. Okay. Okay, well, I think it's 8:31 and I know people are still coming in, but we do have a few housekeeping items. So, first off, just want to welcome everyone to Maze Live. Thank you guys all so much for participating today. We're in for a treat this morning where Whitney Crockett is going to be presenting Understanding GFOA comments, what they're saying, and how to respond. But before she goes into her session, we're going to go over a few housekeeping items, and hopefully everyone will be joining us already by the time we finish those housekeeping stuff. So first off, just want to note that this session is being recorded. We're hoping to have these videos available in case anyone wants to re-watch, or anyone who wasn't able to attend today will be able to watch it later. Um, for questions related to the session, to the topic, questions for Whitney, please utilize the Q&A button at the bottom of your screen. Um, you can feel free to ask questions throughout, and we'll pause to answer them throughout the class when it's a good time to do so. Or some of the instructors may also reserve the questions until the end of their presentation. If you prefer to pose your question anonymously, there is that option to do so, so you can change your name to anonymous. For technical concerns, if you have any, please utilize the chat button at the bottom of your screen, and we'll do our best to address it if it is something on our end. And just so everyone knows, there is a PDF handout of this class. You should have received that by email. We will also post it in the chat a couple of times throughout the session. And then if you are unable to receive it, you can always email us and we can send it to you after the session as well. For polling questions, so just so you know, if you want CPE credit, we are going to have polling questions throughout the class. Please make sure to respond to those polling questions. You will get credit whether your answer is right or wrong. So no worries if you answer incorrectly, you'll still get credit for attending. If you do have any issues with being able to click on the polling question, um, please type your name into the chat, and then that way we know that you are attending, and we can give you the proper credit. Um, Also, there will be a survey at the end of the class. That survey will be posted in the chat. We'd appreciate if you can fill out that survey then. Please click on it when it does come up. It is the same link for all classes if you are attending multiple. We will also send you a thank you email to all attendees after Maze Live is completed. which will have the survey link in it as well. The CPE certificates will be emailed to you within 2 weeks after you have completed the survey. So make sure you take the opportunity to fill out those surveys after each class you attend. And so let me go ahead and just provide a little introduction of Whitney before turning it over to her. So Whitney is from Mays and Associates. She is one of our wonderful partners here. She is a California CPA and has been with the firm for 13 years, specializing in audits of municipalities, including cities and special districts. Whitney is a member of the AICPA and California Society of CPAs and a member of the Cal CPA East Bay Scholarship Committee. She is a frequent speaker at our annual trainings. And so now I will go ahead and turn it over to Whitney. Thank you.
All right, thank you. Okay, so I'm going to share my screen, Vic, or my
Okay.
PowerPoint. Let me know if you can't see it for some
Okay,
reason,
will do.
just to start. Okay, share. And I'm going to start the PowerPoint. So can you see the PowerPoint, not the
Not
slides?
yet. Oh, there we go. You're good.
Okay, perfect. So no notes, right?
No notes.
Okay, cool. All right. Okay, good morning, everyone. Today I'm going to be talking about GFOA comments. So some comments that we see, some common ones and also some oddballs and unusual comments. And then also how to respond to those comments and what they're saying. So a bit of history here. So the GFOA award program was basically established to exceed or to encourage governments to exceed generally accepted accounting principles, aka GAAP, and promote full disclosure. It was established in 1945, and essentially the award program is recognizing individual governments that succeed in achieving that goal. So there's certain requirements in order to be able to get the certificate, and that is the COA program. So each year, agencies can submit their report, their annual comprehensive financial report for the GFOA award. And then as part of the GFOA review program, a reviewer will review the report in accordance to the GFOA checklist and the requirements. And then the agency gets the comments and an award or no award if the review was not satisfactory. If for some reason an agency is not awarded the certificate for the report, the agency can appeal GFOA's decision. And if you ever have any questions about any of the comments you receive, you can also call the GFOA directly through their Technical Services Center. Okay, so how to read comments. In the comments on the first page, when you get them, there is a legend of specific authoritative literature that is provided for a majority of the comments. All references are followed by the number of the pronouncement, if applicable, and then the specific paragraphs, the footnotes or appendices within the publication that's being referenced. If you see in any of the comments a reference to the gaffer, that is referencing the chapter in that publication. And you can easily type in your Google or Chat GPT, whatever you use, the gaffer, the e-gaffer, and you can get the link to it because it's online now. And then any references to Q&A are references to the applicable chapters and questions in the Q&A for GASB. And then references to the checklist questions are references to the GFOA award checklist. The way that the comments are organized are by categories. So for example, you have on this slide, the cover, table of contents, and formatting, and then the introductory section. And then any page references that are mentioned below the comment or below the comment number are referencing the related ACFR page number that was under review. That way it's easy to reference. So for example, for the first comment on here, you have the section cover, table of contents, and formatting. And then it says pages 36, 51, and 53. So those pages are referencing the pages in the annual comprehensive financial report. And then they say, okay, also use the term smooth fair value rather than smooth market. Refer to GASB statements 67, 68, 72, 74, and 75 for further guidance. That's a lot, but that's just a direct reference to the GASB statement. And then they also say the term fair value should be used in place of market value. And then they reference GASB 31, paragraph 7. So that's an example of how to read a comment. And then on the comment below that one for the introductory section, they say to refer to the date of the independent auditor's report on page 3. And then that's on page 1. The date of the letter of transmittal should be no earlier than the date of the independent auditor's report. So the reference here is the certificate program requirement. And then E-GAFR, chapter 33, introductory section, letter of transmittal. So that way you can easily copy and reference to those. Okay, so let's talk about general presentation and readability. So this first comment is basically saying on page Roman numeral 1, the letter of transmittal should also address the district citizens. The transmittal letter should address the government citizens as well as others. So if you look at the snips below the comment, you'll see that when the reviewer was looking at this, they were looking at the transmittal letter that said board of directors for such and such district. And what they're asking is for both the board and the community to be addressed in the transmittal letter. So in order to address it, they added president and members of the board of directors, customers, and interested parties of the such and such district. So that pretty much covers anybody else that might be impacted by the report. So yeah, just make sure your transmittal letter speaks to both the board and your community. Okay, management discussion and analysis. So we've seen a lot more comments in this area recently, but let me just cover what exactly these example comments said was the problem. So the first one is in management's discussion and analysis, the discussion of overall operations should explain the reasons for the changes in net position rather than focusing solely on the size or composition of the changes. So for example, to explain an increase in tax revenue, the MD&A might say tax revenues for the year increased primarily due to increased property taxes revenue, which grew as a result of a 2% rate increase on all classes of property, as well as an average increase of approximately 3% in the taxable property values driven by increased local real estate market values. So that's a beefed up, good response, good meaty addition to a change that's being discussed in the MD&A. So not only quantifying the change that happened during the year, but adding context to it and kind of like a story. So they want to see more narrative clarity in the management discussion and analysis. And then the other one below that is when discussing the reason for the change in fund balance of the general fund, discuss major changes in revenues and expenditures from the previous year, rather than discussing the budget, which is a separate requirement for management's discussion and analysis. Discuss the main reasons for the increase in the property taxes and the business license and franchise taxes in the general fund from the previous year. Also discuss the main reasons for the increase in the fund balance in the Measure D Special Revenue Fund from the prior year. Refer to the example below. This comment was provided last year and not fully implemented. So again, what they're looking for is more reason, more beef in the reason for changes, and that includes any variances between budget and actual. So what they're getting at, we're seeing this comment or these types of comments more and more. And I think it's because reviewers are more focused on this one due to GASB 103, which is the financial reporting model improvements, which will become effective for fiscal years beginning after June 15th, 2025. So fiscal year ending June 30, 2026, or calendar year December 31st, 2026. And that GASB will actually be covered in the class tomorrow. But that statement is basically modifying the MD&A requirements to provide more detailed explanations of significant changes in balances and results rather than just presenting amounts. So how to address this, just ensure that your MD&A goes more in depth on the reason for changes, not just a fact that a variance exists. All right, we're ready for poll number 1. So we want to make sure you guys are awake. So, what is your go-to reaction when you see a new GFOA comment letter? Bring it on. Okay, we have like 40, 50%. It's climbing, it's climbing. 80%.
Okay, I think you're probably good.
Cool. Oh,
Oh,
sorry, I clicked when you clicked. Okay, results. So looks like 40% of you said, yay, another growth opportunity. I'm surprised you guys didn't pick, let me just lie down real quick. That sounds a lot more comfortable. And bring it on. And I don't see any questions
no, no questions
so
yet at
far.
this time. No.
Nice, okay. Okay, so now we're going to move on to the basic financial statements and specifically the net investment in capital assets. This is one of the most frequent errors or comments that we see. And basically what the reviewers are looking for is that there is clarity in the application, the basic financial statements, and the award application, or I think I just said that, the spreadsheet that gets uploaded with the application to make sure there's consistency in all of those documents. So we're going to really cover this one in depth. So these comments here, the first one says page 21 for the governmental activities, include the lease liability in the calculation. So the calculation of the net investment in capital assets should include the long-term debt related to the acquisition, construction, or improvement of capital assets, regardless of the type of debt. So they want to see those lease liabilities in that calculation. The next comment is for the governmental activities, it appears the 12 million of lease revenue bonds issued during the year were not spent as of the fiscal year end. Refer to the expenditures of the non-major governmental funds on page 30 and the expenditures for the PD Tenant Improvements Fund on page 176. And they further clarify the source and say that debt that was issued for capital purposes should not be part of the calculation of the net investment in capital assets until the proceeds have been used to acquire capital assets. Note that the unspent bond proceeds should be reported as either restricted or unrestricted assets as appropriate, and the related portion of the bonded debt should be reported in the same component of net position as the unspent proceeds, and therefore will not have any net effect on classification of net position. So this is particularly important if you have new debt that you're using to, for a project or anything like that. You want to make sure that those that's captured appropriately in your net investment in capital assets. And then also making sure that it's not sitting, if you have proceeds at year end, make sure it's not sitting in your unrestricted net position at the entity-wide level, if it's for capital purposes. Especially if it's supposed to be spent on capital projects. So it's just providing clarity on that because there's been a lot of inconsistency. And then the next one or last one on here is per the worksheet, with the calculation of the net investment in capital assets submitted with the application to the certificate program. So that's what I mentioned earlier. When you submit the application, you have to upload a worksheet that has the net investment in capital assets. Basically, the business type activities report, capital accounts, and retainage payable. So if you have in your application said that there are capital related accounts payable and retainage payable, and so if you say you have that, but it's not in your net investment in capital assets worksheet and it's not captured in your basic financial statements, then they're going to point it out. They want to see consistency in the way it's reported in the worksheet, the application, and the basic financial statements. So yeah, basically just we're seeing that comment or those comments a lot. This is a continuation, so but different type of comment. So government-wide financial statements. The comment is refer to the calculation of the net investment in capital assets submitted with the application to the certificate program and to the disclosure on the application itself. It is unclear why the unspent bond proceeds in the amount of 388,000-ish were not included in the calculation of the net investment in capital assets. So they further clarify to say the liability related to the unspent portion of a debt issuance should be included in the same component of net position as the asset related to the unspent proceeds, i.e. restricted for capital projects, or I guess example, the unspent portion of the debt would then be offset by the unspent proceeds, and there would not be any net effect on any classification of net position. Reporting both within the same classification of net position prevents one classification from being overstated, while another is understated by a similar amount. So an example response in this case was that the unspent bond proceeds are immaterial. So just talking about that, if you do have a comment that is the impact is extremely insignificant to you, and talk to your auditors to make sure that they agree to, you can respond and in your response to the GFOA award comment that you will address those things if it's material going forward, instead of addressing it, because you're looking for material compliance with GASB. You don't have to be perfect. So yeah, that was basically what the response said. That, however, the city will ensure material unspent capital related bond proceeds at year end are included in the calculation of net investment in capital assets in the fiscal year 24 report and in future reports. The next comment on here is about accounts payable. So they say it is unclear why the accounts payable were not included in the calculation of the net investment capital assets of the governmental activities. Refer to the calculation of the net investment in capital assets submitted with the application to the certificate program and to the disclosure on the application itself, as well to the accounts payable in the roadway improvements, community facilities improvements, and Parks and Trails Improvements Fund on page 127 of the ACFR. Also refer to the calculation of the net investment in capital assets for the business type activities. It appears that 3.3 million in accounts payable were not included in the calculation. Clarify. So that is a very detailed review comment. But basically they're saying that they're pointing out that there was no consistency with the calculation of the net investment in capital assets in the application that was submitted for the award and the basic financial statements. So they're just pointing it out to make sure that it gets captured and the response here was noted. The city will ensure material capital accounts payable at year end are included in the calculation of net investment and capital assets in the fiscal year 24 report. Okay, so this slide just shows the checklist explanation for the net investment in capital assets. So it's pretty detailed. This is directly from the GFOA checklist. And so you can see what the reviewers are actually looking for. So you have, okay, is the amount reported as net investment in capital assets calculated correctly? Explanation, the government should calculate its net investment in capital assets using the following general formula. So the calculation is capital assets, so that includes your tangible and intangible capital assets, less accumulated depreciation or amortization, less the outstanding principal of capital related borrowings. So that's make sure that it's just your capital borrowings. Anything that's non-capital should not be included here. And that is the outstanding principal of capital related borrowings is further offset with unspent proceeds related to capital debt. So that way you're capturing the true investment or I guess the true amount spent and invested by the agency into capital assets. And then less, in addition to that, debt used to refund capital related borrowings, less any other non-debt capital related liabilities as of fiscal year end. So that includes accounts payable and retainage payable. And I do want to add for the outstanding principal of capital related borrowings, I should have emphasized this. You want to make sure to include your lease liabilities and subscription-based IT arrangement liabilities. They're looking for that now because that's really a capital related borrowing. Okay, going back down. So then in addition to those other liabilities, so that would be like, accounts payable that are related to capital assets, or retainage payable. You also want to add in any original issue discounts on outstanding capital debt. And then you want to subtract any original issue premiums on outstanding capital debt. And then you want to add capital related deferred outflows of resources if you have any. So that would be like a loss on the refunding. And then you want to subtract capital related deferred inflows of resources. So those would be like gains on refunding. So that's a good resource to double check your net investment in capital assets. And then I also have a link here to the net investment in capital assets spreadsheet template from GFOA online that is required to be submitted with your award application each year. Okay, so this is an example way to address basically a further explanation of what's in your net investment in capital assets. So in some cases, you might find that breaking it out in your footnotes to the financial statements could be beneficial. This is just an example, but this particular agency has this table in their footnotes. So you can see they have the capital assets net of accumulated depreciation for both their governmental and business type activities. And then they take out the capital related debt for both. And then they add back unspent bond proceeds. So basically they added this so that the net investment in capital assets total could easily be referred back to the basic financial statements and vice versa. So that might be helpful, especially if you have complicated net investment in capital asset calculations, but you have to assess that. Okay, so continue with basic financial statements. This comment was on the statement of cash flows. So on here, the comment was page 54 for the net proceeds from debt issues under the cash flows from capital and related financing activities. So what they're saying, what they said in this comment was cash receipts and cash disbursements generally should be reported gross rather than net on the statement of cash flows, except for one, certain items whose turnover is quick, whose amounts are large, and with an original maturity of 3 months or less. So that would be like certain investments or loans, like maybe a really short-term borrowing that's, a couple of months. And then number two, governmental enterprises whose assets for the most part are highly liquid investments and that have little or no debt outstanding during the year. So that would be very unusual, I think. What they're getting at is they don't want to see netting in the statement of cash flows. So as much as possible, make sure to gross up activity in your statement of cash flows. That way, it's GASB compliant. For this comment, you can see on this slide before. So what the reviewer was looking at is on the left, the before. So there were principal payments on long-term debt and contracts payable, principal payments on subscription liability, and then net proceeds from debt issues. So that's where the comment came to the reviewer's attention. They didn't want to see the net proceeds from debt issues. So in order to address it, the agency added additional detail in the statement of cash flows. So for example, for that particular line item, net proceeds from debt issues, in the statement of cash flows on the right, they added a line proceeds from debt issues. And then they also added in separate lines to split out principal payments on long-term debt, principal defeased on long-term debt, principal payments on subscription liability, principal payment on lease liability, and then also the proceeds from subscriptions and leases. That way it's all split out on its own. There's no netting in the statement of cash flows. So that's just an example of how to address a comment like that. Okay, so basic financial statements. This is just a preliminary consideration comment. So the comment here said, each of the basic financial statements should include a reference to the notes. So that's a certificate program requirement. That was an easy one to address. Basically, the requirement is that the basic financial statements should include a reference to the notes to the financial statements. So that can be done in many ways, but the most common one is just something at the bottom of the statement, each basic financial statement that says, see notes to the basic financial statements or something like that. So the comment was addressed by noting it and saying each statement now includes a reference to the notes. So pretty simple. All right, I'm ready for polling number 2, Amy. Okay, so understanding fund balance classification. Under GASB 54, which of the following is not a fund balance classification?
%86 seems to be at our stopping point, so I'll stop it here.
Okay, cool.
Share.
Why not?
Oh, it's shared now, right?
Yes, sorry.
Okay.
It stopped.
Oh my gosh. Okay, I'm still waking up apparently. All right, so non-spendable was the most answered, and that is not correct. So actually, the reserved fund balance is not a fund balance classification under GASB 54. So you have non-spendable, restricted, committed, assigned, and unassigned, but reserved is no longer a classification. And I don't see any questions
No.
unless I'm missing something.
No. No. No questions. You're doing such a great job, Whit, that nobody has any questions.
Okay, cool. Bring it on though, if you want. No, I'm just kidding. Okay, wait. Okay, so we're gonna move on to the notes to the financial statements. This is definitely an oddball comment, kind of aggressive, I guess I'll just say. Um, so the comment was, well, there were two parts to it. So note disclosure, page 38, it is unclear why information is not presented for item 3 below. Please clarify. So the notes should separately disclose 1, beginning of the year balances, 2, increases, 3, decreases, and 4, end of the year balances and accumulated depreciation or amortization for each of the major classes of capital assets. So you got to have all of that. And then below that, they say the note should separately disclose beginning of the year balances, capital acquisitions, sales or other dispositions, and 4 end of the year balances for each of the major classes of capital assets. And they said it's unclear why information is not presented for item 3 below. So what they were getting at is that there was nothing in the footnote disclosure tables that showed decreases in accumulated depreciation, nor sales or disposition in capital assets. But it was just weird. We have no idea what the reviewer was looking at because in the table, which is on this slide, you can see that during the fiscal year, there were only additions. So there were no retirements and therefore there were none to disclose. So not sure what they were looking at, where they thought there was a retirement that should have been disclosed. But one way to address a comment like this is to respond with something as simple as there were no retirements during the fiscal year under review, therefore none to present. And we'll note to include that information on retirements of capital assets in the future if there are any. So it can be a simple response to them. Because sometimes, reviewers are human too. Sometimes they miss stuff here and there. Okay, so now we're moving on to budgetary compliance. So let me just go through the comment. So the comment said the legal level of budgetary control is at the department level. It is unclear if the expenditures in the budgetary comparison for the general fund are being fully reported at the detailed level of the department level. It is unclear why the finance department is not reported as a separate line item for this budgetary schedule. The budgetary schedule for the general fund is required to be reported at the department level. This comment was provided last year. So the clarification on this is if the budgetary comparison schedule for the general fund presented within the basic financial statements or the required supplementary information does not demonstrate compliance at the legal level of budgetary control, the governmental fund subsection should provide a budgetary comparison schedule for the general fund that demonstrates compliance at the legal level of budgetary control. So what this reviewer noticed was that there was a missing department in the general fund budgetary comparison schedule. And the policy, which was disclosed in the report of the client, said that the legal level of control for the budget is at the department level. So all departments technically should be included in that budgetary comparison schedule. So this is a easily avoidable comment. Just make sure that expenditures in the budget comparison schedules are reported at the legal level of control, and if they aren't, make sure to add a footnote to disclose how they are in compliance. And don't forget departments like finance. So if you look at the next slide, before on the left is what the reviewer was looking at. So there were only six departments. So general government, non-departmental services, administrative services, public works, community and economic development, and police. Somehow they noticed, I don't know how, but that there's a finance department that should be in there. So it was part of the administrative services. So in order to address the comment, finance was added. So the next year there were 7 departments presented to address the comment. Because that is the legal level of control for budgetary purposes for this client. Okay, statistical section, everyone's favorite. So this comment has to do with the schedule of changes in fund balance of governmental funds, specifically the very bottom calculation, the debt service as a percentage of non-capital expenditures. So the comment said, pages 116 to 117, use the capitalized capital outlay amount of 23.6 million from the reconciliation on page 25. It appears that the ratio is 6.7%. So the context here is the amount of capital outlay used to calculate the ratio of total debt service expenditures to non-capital expenditures should be the same as the reconciling item for capital outlay in the reconciliation between the government-wide statement of activities and the statement of revenues, expenditures, and changes in fund balance. So again, they're looking at the reconciliation that goes behind the statement of revenues, expenditures, and changes in fund balance in your basic financial statements that ties back to your statement of activities. And there's this one number that gets presented in that reconciliation that has to do with the capitalized capital outlay. And so the reviewers are looking to make sure that that number is what is being used in the ratio of total debt services expenditures to non-capital expenditures, and recalculating the percentage. So that's a pretty easy fix, but one that we see come up. I would say somewhat common, where the reviewer notices that the calculation's off. Okay, continuing with the statistical section, these comments have to do with the amounts presented in the total direct debt in the schedule of direct and overlapping debt. And basically, they're asking the agency to include lease and SPITA liabilities. And really what they're getting at here is they want to make sure that the liabilities, outstanding debt matches the basic financial statements. So they're tying those back to the statistical section. So the comments here, the first snip has page 121, that's the page of the statistical schedule. Refer to page 49. Include the premium in the city's total direct debt in the schedule of direct and overlapping debt. So here they were looking at the debt table, or table of long-term debt in the footnotes to the financials, and noticed that the premium that was in that table did not agree to, or was not included in the table with all the total direct debt. So they want to see consistency between all of that. So make sure to include the premium and any discounts. And then the second snip is refer to the lease payable disclosed in the governmental activities on page 66. Include the lease payable in the ratios of outstanding debt by type schedule on page 134 and in the total direct debt on page 136. Information should be presented about the lease's liability. So again, they want to see your lease liabilities in that table or schedule. And then the comment below that says, refer to the SPITA liability disclosed in the governmental activities on page 85. Include the SPITA liability in the ratios of outstanding debt by type schedule on page 134 and in the total direct debt on page 136. Information should be presented about the SPITA liability. So this was a common one that was missed during GASB 87 and 96 implementation, but something to make sure you're capturing in that total outstanding debt table. So in order to address the comment or part of the comment on the previous page was to add leases to the total outstanding debt table. That way it captures all of those capital, or I guess long-term debt, all including leases. There were no SPIAs in governmental activities for this client. So also, so this slide is showing the gross, direct, and overlapping debt table. So you want to make sure that where the line item that's highlighted, total gross, direct, and overlapping general fund debt, you want to make sure that that figure agrees to the total outstanding debt table. So it's going to do a double check to make sure, because reviewers will notice if that number is not in agreement with that total direct table. Okay, so overall statistical section comments. So this one was saying that on these pages in this agency's ACFR, the total revenues and the total expenditures did not agree with amounts presented elsewhere in the ACFR. So in the statistical tables, it's really important to look to make sure before you bless everything to be finalized, to make sure that all the statistical tables tie to the financial statements, because reviewers will definitely look at that to make sure that it ties. So that's a good reason to not do your statistical section too early in the drafting of the basic financial statements process, because you don't want to miss any last minute changes. And then you just want to make sure you're doing a double check of those tables to make sure that the tables agree to the ACFR, so you don't get a comment like this. Okay, polling question number 3.
Sorry, having technical difficulties. It is not. There we go. Okay.
Okay, cool. So if GFOA comments were weather forecasts, how would they be described?
We want all of you to be sunny and calm with a light breeze.
I love those comments.
All right. Looks like we're about at our 90-ish%. All right, I'll end the poll.
Okay, cool. Okay, so you guys are feeling cloudy with a chance of helpful suggestions.
Love it.
I agree. I think, yeah, I agree. Thunderstorms, maybe sometimes, especially if it's a kick out comment, but
Yes, those are the worst. All right, and we do have some questions.
oh.
Okay. So the first question is, what is the most common comment received?
I think
Amy
it's
and I
net
have
investment in capital assets. What about you guys?
yeah, that definitely.
I agree.
Definitely that one. And then the other one that I see often is that the MD&A doesn't talk about major funds other than the general fund. So like
Oh,
there's always a lot of discussion about the general fund, and then
mhm.
oftentimes just very, very minimal comments about the other major funds. So I do see that one a lot as well.
That's a good one.
And then the second question is, what is the comment number referred to, like comment number 2663? What does it mean? And I think, Amy, you know that.
I know. Does Whitney not know? She might not know. It's GFOA's database. So if you notice, if you happen to get the comments when we see the comments from more than one client, you'll see the same number if it's a similar comment.
Oh, so like they
It's
pick from
their,
the database of responses,
Of
of comments.
comments, and then the response, or excuse me, then the second paragraph underneath the comment number and the statement is the one that's specific to the client or specific to the report.
Oh, yeah. And then the paragraph below that is like the authoritative guidance, right?
Yes, agreed. Good questions.
Cool.
all right. Thank you.
Nice. That's it?
Yes, those are the only questions currently.
Okay. Cool. Wait. Okay, so I know everyone's, well, maybe it's just me, but I'm sick of RSI stuff. But GASB is still seeing, or I guess GFOA reviewers are still seeing issues with GASB compliance related to payroll RSI. So this first snip is referencing required supplementary information. And they say reference covered employee payroll rather than covered payroll for the OPEB plan if contributions are not based on a measure of pay. So the guidance here is for employers that provide OPEB through OPEB plans that are administered through trusts or equivalent arrangement, the RSI schedules should use covered payroll, so the payroll in which contributions to the OPEB plan are based, as the measure of payroll. If contributions to the OPEB plan are based on a measure of pay. If contributions are not based on a measure of pay, the RSI schedules should use covered employee payroll, which is the payroll of employees that are provided with OPEB through the OPEB plan, as the measure of payroll. So in order to address this comment for this client, the contributions to OPEB are not based on a measure of pay. So they had to change the contributions, well, both schedules related to OPEB and the RSI, but this SNP is just the contributions in relation to the actuarially determined contribution. And you'll see below that, you have the covered employee payroll. So they changed that, and then contributions as a percentage of covered employee payroll, because before it said just covered payroll. So just be especially mindful of RSI formatting and requirements, because it's still a growing area of review. Okay, so entity-wide reporting. So this comment was on the government-wide financial statements, and it referenced the statement of activities. And they say the losses on the sale of capital assets of governmental activities should be reported as either an expense of the general government or as a direct expense of the related function or program as appropriate, depending on the specific circumstances. So in this case, you'll see on the right, the SNP, on the statement of activities, there was a loss on disposal of capital assets in the general revenues area, and that is a no-no. So they want to see losses reported above in the expenses area. So it should be allocated to a specific function or program in your statement of activities if there's a loss. If, on the other hand, if there's a gain, then it's appropriate to report it down here as a gain on sale or disposition of capital assets. But it's not appropriate to report the losses down in the general revenues area. Okay, entity-wide reporting continued. So this comment was, okay, refer to the net pension asset. Normally, a net pension asset would result in a restriction of net position. This comment was provided last year and was not fully implemented. So yeah, they'll call you out sometimes if you get a comment that was provided in the prior year, but you didn't fully implement it, they like to point that out in the comments. So the guidance here is unclear why the government reports restricted assets but not restricted net position. Please clarify. So make sure that your restricted assets, if you have any, make sure that those get reported in restricted net position in the statement of net position. So a good example of that would be, restricted pension assets, if you have a trust, or if you had, in this case, a net pension asset. So in order to address it, the balance sheet or the statement of net position included the pension asset, net of the related deferred inflows and outflows, as a restricted component of net position. And the same goes for if you had or have a net OPEB asset. You want to make sure it's captured in restricted net position. Okay, governmental fund financial statements. So this comment said to, and the page was the governmental funds balance sheet that they were looking at, to clarify for the prepaid items in the blah, blah, blah fund. So the guidance is inventories, prepaid items, and the corpus or principal of a permanent fund should be included in non-spendable fund balance. So make sure your fund balance classifications adhere to the GASB requirements. For example, non-spendable fund balance should include inventories, prepaid items, and the corpus or principal of a permanent fund. And so to address this, the response was noted prepaid items, consumable supplies, and the corpus of the permanent fund are included in non-spendable fund balance. So that was what was done to correct and implement the comment. Okay, so moving on to the combining an individual fund information and other supplementary information, if you have any. So this comment was in that area, and if you look at the comment, it says, it prefaces with specific comment that, if not corrected in the next report, will preclude the entity from receiving the certificate of achievement. So this is what we call a kick-out comment, which basically means that if it's not corrected in the next report, it could preclude the entity from receiving the GFOA award. So those are ones to really make sure you are addressing. So the comment was that a budgetary comparison schedule should have been provided for the blah, blah, blah fund, even if a zero activity budget was adopted. Refer to the budgetary note disclosure on page 56. So the guidance here is the governmental fund subsection should provide budgetary comparison schedules for any annually or biennially budgeted non-major special revenue funds, debt service funds, capital projects funds, and permanent funds that demonstrate compliance at the legal level of budgetary control. So if you adopt a budget for a fund, for governmental fund, it needs to be, there needs to be a schedule, a comparison schedule in your ACFR. Even if there's no activity in the budget projected, it still needs to be included. If you budget for it, they want to see it. So they will check to make sure that that's consistent, that your budget policy and what you're budgeting for is appropriately captured in your ACFR. Okay, so other common observations that we've seen, this is going back to just making sure that your award application responses match the ACFR. They're really looking at that more and more, I think. I've seen this comment come up, or comments like this come up more and more. So the comment is, it is unclear why the city states in its application submitted to the certificate program that annual budgets are adopted for 11 special revenue funds and 2 capital projects funds when budgetary comparisons for 8 special revenue funds and 1 capital projects fund are presented in the ACFR. Please clarify. So the requirement is that the budgetary presentations included in the annual comprehensive financial report be consistent with the government's budgeting as described in the certificate of achievement application form. So again, they're looking at your application or your award to make sure that it is consistent with what you've presented in your ACFR. So you want to make sure that when you're answering those questions that you've appropriately captured them, because they will give you a comment like this. Okay, last poll. Which of the following is a common GFOA comment related to financial reporting?
I like the lack of a balanced budget. Thankfully, GFOA is not too judgy, too judgmental.
Have you ever seen a comment about that?
No, no. Other than if the expenditures exceed budget dramatically and there's no footnote. Expenditures, so expenditures in excess of appropriations and no notation about it.
Mm. That would be pretty judgy if they were calling agencies not on that.
But I did want to, I should have piped in when you said it, when one of the questions when you asked, you said, how did they know about the budget? GFOA reviewers will sometimes look online at budget documents and they're trying to clarify things to see if the presentation is correct. You know how you said, how did they know there was a finance department?
Oh, I see.
Yeah. All right. We'll
That's
end
sneaky.
This. We'll end this and share.
Okay, so the correct answer is missing budget to actual comparison. I've never seen one that says they have too many pages in the financial report. That would just be mean.
No, they will comment if you have pages going landscape and portrait, too many of those, but not, or the old days, back in the old days when they used to give the comment of the report does not lie flat.
Yeah.
If anybody remembers that
Wow.
one. Yes. All right.
That's aggressive. Okay, so do we have questions or?
I don't believe so.
No.
Vic, did you see
No,
any?
I don't see any. The 2 questions we got, you answered, so I think you are good.
Nice. Sorry, I forgot to share the results on that one.
Oh, I thought I did. Okay, sorry.
Oh, maybe you
I
did.
and I unshared it. Sorry, Whitney.
I think the 2 of you are fighting over here.
We are.
It's all right.
Well, we got this.
Yeah.
Okay, well, I guess that's the end. So these are my resources. So if you want to, look at any of the stuff I've talked about, the GFOA checklist, awards, and then training. So GFOA actually has a lot of training resources on their site too. So that's a reference to that. And then if you want to steal any of my images, I gotta make sure to put that in here too. Oops. Probably the Dumb and Dumber one. That's the best. But yeah, thank you everyone for joining me and us bright and early, and hopefully we'll see you in more sessions.
Yes,
But
thank you
yeah.
everyone. And just a reminder that the survey is in the chat now. So before you get up to take your break, please fill out that survey so we can get the CPE credit out to you. All right. Thanks all.
Thank you.